Hey guys, Mike here. So, about what an interesting day in the market and very volatile and like ping pong, as I'll show you in just a minute what happened. But we'll talk about one while we're at red, and really the big reason is because FOMC is tomorrow, so that's a really big thing that's happening, and we get to see crazy price action. But also something else was going on. It started yesterday, rolled out in pre-market day. I'll show you that. Also, just had not one but two 90% up days, which means 90% of stocks were advancing. Not one, but 2 days. Remember, one day don't make a rally, two don't make a rally, but three we can start talking, okay? The reason why I say that, I don't know if there's a rule for that, those first couple of days, that's when the shorts are covering, which means they're buying back stock, and that's going to help advance things up, and then the calls start getting bought because people think, well, we're down 10%, risk reward says we're probably going to get a bounce, right? So I'll buy some calls or whatever, which makes money, the market makers hedge and all that good stuff. Then you get to day three, and then you say, okay, now where are we really at? Are buyers really stepping in here? And there was something that happened on S&P which showed buyers did step in when they needed to, and I'll show you that. It actually was bullish as far as for market structure and everything like that. So we'll go through that. Also, we'll cover that 2 consecutive 90% up days because it is rare, but I actually went back and verified each one of them on the chart to see what was going on in the market, and there's only one of them that's an outlier. The rest of them have one thing in common, and it might really surprise you what happens 7 to 14 days from yesterday going forward when this has happened in the past, and it's not many at all. Kind of surprised me, to be honest with you. But then when you extrapolate out even farther, that's actually probably going to be even better news for some of you guys. I'm also going to show you a chart that verifies this conversation I have with my neighbor who manages money and stuff for more wealthier clients, and this basically verifies exactly what he said he's doing and what these people are doing. I'm talking about like people that have a lot of money, okay? And so we'll go into that chart. I got a bunch of other stuff for you, but when you look at this right here, and this is something important to know going forward. So S&P 500 after 2 consecutive days with 90+% of S&P stocks advancing. You can see it doesn't happen very often, and I went through and verified each one of these. Here's one thing almost every one of these have in common, except for one day actually. Actually, I'll go with 2. Is that most time we were in volatile situations, okay? 2013 and 16, if I remember correctly, that don't jive. The rest of these do, all right? A lot of high volatility going on. But when you look and you say, wow, what happened 1 week later and 2 weeks later? Well, we set a new low. That's what happened. And so the October 4th, 2022 is really the one you remember the most because we thought we bottomed. We bounced, got a really big, nice sharp bounce, and then we came back down and set a new low on October 12th or 13th it was, and then we went on from there. But if you look 2 months later, 6 months later, 1 year later, I mean, up pretty good, right? I mean, and definitely green. So that's what we're looking at on that. Now, of course, what happened yesterday to send futures down, and then, of course, this morning in pre-market didn't help. And this stuff doesn't help the market. It creates more volatility, and that's what we'll look at. When we're looking at the VIX, you're like, man, it's cooling off, but like every day seems to be an event except for Friday and Monday. We really didn't have an event. Today we had, or yesterday we had one thing, this morning was one thing, and then you had President Trump and Russia's President Putin talking for an hour and a half, and after that it was just nothing but headline after headline coming out about it. Shocker, Putin didn't agree to a ceasefire, but he did agree not to bomb any more plants, which that would be nice, like nuclear power plants, things like that. That would be nice. So it's a start, so we'll go with that. And so we'll see where it goes from there. But those headlines just kept popping and popping like every 20 minutes, it seemed like. And so this is what President Trump said yesterday, which no surprise. And then he sent his Treasury Secretary out there this morning pre-market to basically say the same thing.
In other words, whatever they're charging, we're charging. Very simple. If they're charging us, we're charging them. It's no longer they charge us and we don't charge them. It's foolish precedents.
And so nothing new, and then here comes the Treasury Secretary this morning, and again, it's all the same rhetoric. They just keep saying the same thing over and over, and it's funny. I'll keep saying this, and again, it ain't going to be perfect, but the 10-year was up 1% in pre-market. Guess what? It rolled him out. 10-year went red. I mean, I'm telling you, it's amazing to watch, but as soon as it goes up, they go, nope, get your butt out there, boy, start talking, all right? And, of course, it just created this ping pong, right? We just kept bouncing back and forth in this very tight range. It was a 0.5%, then it squeezed down to like 0.25%, and we just never got anything going. Again, it was a ping pong table. That's all it was. Very boring to watch and stuff. And so that's all this is going on today. And, of course, the reason why we couldn't get anything going was the VIX. Remember I said I wanted to close below 20. It didn't. It popped back up. It got rejected at 22. And the reason why I want it below 20, I'm just looking back at mid to last year going forward, is we'll put a line on this. But when you look at it, we end up, when it gets below 20, it usually kind of cascades down. Like it really picks momentum to the downside. As we can see, the last few times this has gone up. So I'm hoping, that's what happens this time. But again, they'll have to stay off the news and stop talking about tariffs and Russia and everything else for a minute. Or eventually the market may just start ignoring them, which would be even better, But that will be nice. So look for a close below 20. And as we talked yesterday, I don't know if this is going to have to change or not, is the fact that this is the comparison of the European like 600 versus our S&P 500 PE ratios. Okay, and so used to, back in the day, it wasn't too out of whack. But you can see since '08, I mean, it's been really out of whack where their PE's been going down and ours have been going through the roof. We all know that. We complained about it from 2020, 2024, at least value investors did. You can see this big spike up down here. And so understand, it's not that their stocks are cheap. It's just compared. The valuation is compared. And I showed you the PEs for like the Chinese stocks. I mean, it's like single digits, man. It's crazy. Single digits, which I mean, rightfully so, they drove them in the ground. But, and so they're just cheaper. And on top of that, like I showed you yesterday, they're doing stimulus, right? They're cutting rates. Germany's going to start pumping more money into the economy, all that fun stuff. And so, we'll see how long it's going to last, whether or not, I think personally there has to be a rotation out of Europe and China to start heading back into our market. And kind of what proves that is look what's happening here, how different things really are now. And this shows international versus U.S. stocks, a 2-month performance, 14% up, right? We're down, right? Look at when you've seen this in the past, though, from 2008 to 2009. Is when you saw that big outperformance, right? 2022, big outperformance. What was going on? We ran a crash both those times. The S&P was down 28% in 2022. It was down way more than that in 2008, 2009. And you can just see it. I mean, look at this right here. This is the biggest drop in U.S. equity allocation ever, okay? This came from B of A. Look where it went. Eurozone, UK, emerging markets. Cash is a big one too. Staples, materials, you can go through all that. At the bottom, way down there, that's U.S., equities right above it, tech, energy, and nobody would argue that. That's what's been happening. Okay, now obviously that's unsustainable. If we're going to start moving back up to the top, we got to see a shift, to start moving up here. But, money's going to go. Wherever money's performing, that's where they're going to shift all this big money. I mean, my wife's 401k has like 50% exposure to overseas stocks and then cash and then like 40% US. And guess what's happened to this whole crash? Her 401k has literally kind of done this. Hadn't lost a penny during this whole thing because it was allocated, right? And so if European stocks and Asian and all these other ones can just flatline, not even really move, and American stocks will start to come back, obviously her 401k will go up, right? But she hadn't lost anything because of that allocation. And so, somebody told me just the other day, like for the first time ever, they bought some European ETFs. And I was like, okay. And the one thing, people are looking for, because we're actually trained for this for a reason over the last 4 years, what have you seen? We're so used to V-shaped recoveries, like this right here. Anytime we see a red day, we flip, because look at these. Look at all these V-shaped recoveries. I'm not going to measure all the measurements of these, but some of these are 4%, 5%. Some of these are 10%. That's a 10%. Right there. Look at all the V-shaped recoveries, though. We've just been trained to see this every single time, right? And we'll scroll back, and we'll even do one more if we keep scrolling back here. Let's see, there's that one right here, right? And again, this ain't a perfect V, but this right here was more than the 10% drop down. And look how fast it recovered that 10%. Look at that. I mean, but that's what we're trained for, right? And then as soon as we see any red, we're like, oh my God. And this is the chart I was going to show you guys about what me and my neighbor discussed. And I finally found one to back this up because I didn't want to really bring it to you unless I could find something to back it up. But this right here is titled Buy the Dip, and third largest weekly inflow to equities ever from GWIM clients. And those are wealthy clients. That's Global Wealth Investment Management. And so they deal with people who got a lot of money. And you can see that's the third biggest one, right? And the last one was 2022. One before that was January 2021. And remember the runs we went on in October 2022. And then in January, we spiked big time in the S&P. And I was just talking to my neighbor the other day about this. Shout out to Marcus if you're watching. And man, he said the same thing. He had a list of stocks. Said, "Yep, just load it up." This is the. He'll call. I'm not calling exact bottom. I told you I'm gonna call some bottom. But he said, "This is it. We're going right." And there's a lot of reasons for that. But when I saw that, I was like, "Wow." I mean, it makes sense. Like what people are doing right there. And so you got people flooding into Europe, China. The good thing is, what I said, make me feel better, is a lot of rich folks, they're people who are managing their money, are buying into, you know, these stocks and stuff. And so we'll see if we can finally get some reprieve and start to move up. But again, even if we move up, because remember I was also telling you, like Tom Lee, forget Tom Lee for a minute, but even Jim Carson, who follows the flows, even said, yeah, you know, we'll come down 10, 12%, and then probably rally in there, maybe into summertime, and then maybe back in the second quarter, maybe third quarter, begin somewhere there, start to see some rough times hit, right? Because if you look at charts, normally April going up through usually June is pretty good. July tends to, you know, be the rough spot in there for a lot of times. But again, and a lot of that has to do with OPEX, things like that. But that's what we're going to see. We're going to say this OPEX pans out here, all right, coming up this week, and I'll have more information on that. But again, we'll see. Let me know what you think about all that. I know that's a lot and everything. And so, you know, when you come over here, you know, really easy. What's going on? We're still above the 5-day. 5 days still flat right there, still trying to curl up right there, as you can see. I already told you about the VIX, needs to club below, get below 20. Again, right now, that's the 200 is right above us. We're not going to talk about that right now. But the one good thing that happened was there was a daily fair value gap right here. See that? Before we started. And what do? Came down to the penny and filled it. When you cut through these like a hot knife through butter and just keep going, that is not good. But it respected that. It got to the very bottom and it popped, okay, on the daily. We go to a 4-hour, we can see maybe overnight we come down some forward to fill this 4-hour up right here. And there's kind of a volume gap right below that. We'll see what they're going to do in after hours and how they want to set us up for tomorrow for FOMC, which of course I think everything's priced in, unless there's some crazy shock, which FOMC, I don't know if they've ever even shocked us that much. But, you know, we'll see if that happens or not. But that's a good thing, right? That is market structure. Now, again, is it going to be this clean, this pretty? Probably not. All right, but that's kind of stuff you're looking for right there. And so the fact it didn't break down below that daily fair value gap is actually a plus, you could say. And so we'll see again how the futures work overnight. We'll mark these out. You know, you don't want to go below 5552 right in there somewhere on the SPX, which is the S&P 500. Again, you look above this. There's a gap there above. Also left to be filled and stuff. You got to get through that trend line, the descending trend line right there. But again, we'll mark this one out because that's a gap right there. So that would be a nice target. Again, when it came up, what did it do? It filled that 4-hour fair value gap right there and then started to sell off. And so kind of hunts these out for liquidity. So we'll mark them out right there. And so to the upside, anywhere from 5705 to 5735, somewhere in there. And we know 5700 to 5740, you know, is maybe tough to get through, and let's probably spike up and just something makes us surge like crazy. But again, right above that is the 200 moving average, where we will finally get our first test of that. And of course, really the only stock I want to talk about today is Nvidia. And the reason why, because we talked about how they're probably going to have a sell the news event. Again, their CEO talked about it. He unveiled a bunch of cool stuff. That's fine. This is normal. We know we've seen this with Tesla many times. We've seen it with Nvidia many times, where they pumped it up into the event. As soon as he opened his mouth and said hello, blah, 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 it just sold off, okay? But again, no surprise there. But of course, we're looking at to the upside if this continues up. Again, this is market structure. That 0.5 fib right there on 124. There is a nice daily fair value gap there between 125 and 128. So again, we'll look for that if this wants to keep going, and it can absolutely uplift the market. There's no doubt about that. If it moves, the rest of the chips are going to move, okay? I have no doubt about that. But, you know, having said that, can it go down more? Absolutely. I mean, no doubt. If the Fed comes out and does something crazy, then, yeah, that's what we're going to see. But I think that's been priced in for right now. And again, I can't control the White House administration or what goes on with Russia or anything like that, of course. Now, as far as earnings, you know, nothing big. General Mills, Ollie's, Five Below. So you got your retailers. Nothing big on that. And, of course, the big stuff tomorrow is going to be in the morning, nothing, right? 2 p.m. though, Fed funds rate, FOMC, what do? No rate cuts are priced in for this month. There's only 2, I believe, for the whole year, but that's what everybody's looking for. How many rate cuts do they have priced in? And does he say anything that sounds dovish? Okay, so let me know what you think about that, how you think that's going to go tomorrow. Please hit that like, subscribe button on your way out. Appreciate all you who watched the video. Think about signing up for the membership and let the McDonald's combo, and that's everything you can get with it. And I will see you guys tomorrow.